Cryptocurrency has taken the world by storm in recent years. Initially, it was viewed as an alternative to traditional banking methods, but it has since grown to become a significant investment and payment option globally. This digital currency is decentralized, meaning it is not subject to government regulations or central authorities like traditional currencies. In this blog, we will discuss the importance of cryptocurrency in the future. 1. Decentralization. One of the significant advantages of cryptocurrency is its decentralized nature. Unlike traditional currencies that are controlled by governments and central authorities, cryptocurrencies operate on a decentralized network. This means that transactions can be conducted without the need for intermediaries, such as banks or other financial institutions. This decentralization of cryptocurrency provides more security and privacy for users, as well as reducing the risk of fraud and hacking. 1. Globalization. The rise of globalization has led to an increase in cross-border transactions. Cryptocurrencies have made it easier to conduct transactions across borders, as they eliminate the need for currency conversion, bank charges, and other fees associated with traditional payment methods. With cryptocurrency, businesses can easily trade with other businesses and consumers across the world without any restrictions, making it an ideal payment option for companies that have a global customer base. 1. Investment opportunity. Cryptocurrencies like Bitcoin and Ethereum have been around for over a decade, and they have proven to be a valuable investment opportunity for many. The value of these currencies has continued to rise, with Bitcoin, for instance, reaching a record high of over $60,000 in 2021. Cryptocurrencies have also proven to be a hedge against inflation, making them an attractive investment opportunity for investors looking to diversify their portfolio. 1. Lower transaction fees. Traditional payment methods like bank transfers, credit cards, and PayPal charge high transaction fees, which can eat into profits for businesses. Cryptocurrencies, on the other hand, have significantly lower transaction fees. The transaction fees for cryptocurrencies like Bitcoin and Ethereum are based on the amount of data needed to complete a transaction, making it a cost-effective payment method for businesses and individuals. 1. Speed and efficiency. Traditional payment methods can take days or even weeks to process, especially when dealing with international transactions. Cryptocurrencies, on the other hand, offer fast and efficient transactions, with most transactions taking only a few minutes to complete. This speed and efficiency make cryptocurrencies an ideal payment option for businesses that require quick and secure transactions. 1. Protection against identity theft. Identity theft is a significant concern for businesses and individuals alike. Traditional payment methods require users to provide personal and financial information, increasing the risk of identity theft. Cryptocurrencies, on the other hand, do not require users to provide any personal information, making it a safer payment option. Transactions are conducted using public and private keys, which provide an extra layer of security against fraud and hacking. 1. Blockchain technology. Blockchain technology is the backbone of cryptocurrencies. It is a decentralized digital ledger that records all transactions on the network. This technology has revolutionized the way transactions are conducted, providing transparency and security for users. Blockchain technology can be used for a wide range of applications beyond cryptocurrency, including supply chain management, voting systems, and more. 1. Financial inclusion. Cryptocurrencies have the potential to promote financial inclusion, especially in developing countries where traditional banking systems are lacking. Cryptocurrencies offer a low-cost and accessible payment option for the unbanked population, allowing them to participate in the global economy. With cryptocurrencies, anyone with a smartphone can send and receive payments, regardless of their location or economic status. Conclusion. Cryptocurrencies have the potential to revolutionize the way we conduct transactions and manage finances. From their decentralized nature to their lower transaction fees and faster processing times, cryptocurrencies offer many advantages over traditional payment methods. With the rise of globalization,